Hi, this is Gigi from the Boring Trading. As you know, at the Boring Trader, we use a systematic approach to trading, and we try to use systems that are as mechanical as possible. We derive our rules from pattern analysis, and this in turn is heavily based on price action. Price action is really hard to code into a mechanical rule, and we always need to make heavy compromises between accuracy and punctual analysis on one hand and standard, measurable, one-size-fits-almost-all rules in order to avoid overfitting, of course. Although we haven't been able to completely automate them, we think that we have achieved an acceptable, well actually pretty good, at least for us, level of compromise in our 1 hour system and 15-minute system. And you can see the performance and analysis on our website and some videos. This morning, however, I would like to have some fun and go back to discretional analysis of price action. And I will use 5-minute charts on a number of instruments. This will also show how difficult it is to reduce the fast, clever and enormously insightful analysis into simple rules. At least it turned out to be very, very difficult for us. Besides, we are constantly told that, unsurprisingly, people love technical analysis and price action much more than they like codified rules. So this is for you, people. And let's start, without further ado, on Euro-US dollar. This is a 5-minute chart. You remember, if you've seen the video yesterday, or the day before, I can't remember, that there was this area here that was acting as a resistance and then started acting as support. It's always quite useful to prolong these areas to see if the market is still thinking about this as an important area. And when we start opening, these vertical lines are, this is Frankfurt Open and this is London Open. We start trading after London Open. So when we have this opening in London, we see that this area seems to be still quite important actually. There was a pretty interesting rally after Frankfurt Open, and it stopped exactly at this area here. Our trend indicator, if you want, which is the combination of these two histogram, which is basically based on two slopes of two moving averages, is indicating an upward trend, of course. And so we'll be interested in trying to go long. Trying to go long at this level, however, is a little bit tricky for the euro. First of all, because you will go long on this area that has proved to be an important support and resistance area. Secondly, because you have a psychological level here, which is R1, which is usually pretty well observed by many market participants. So this is not ideally a fantastic setup, because in order to make sure that in order to have a higher probability of success, you want the market to really clear these two areas here. When you do that and you put the stop at the most likely place where the bears can test, you will see that the market will need to go up quite a lot and you already have missed a bit of this move. So that is a trade that obviously if you look at only the euro against the dollar, you might give it a go. But if you look, and we preach quite a lot about diversification, if you look at least 3 or 4 other markets, you can try to see if there is a better opportunity somewhere else. What happens now is that this area is still important. R1 is still important. The bulls didn't make any inroads, and now the bears seems to be taking control. And if you look at this level here, this is a short signal, you might be inclined to go short at this level here, with the stop probably up here. The time of the day and this low here don't really seems to be in the way, so it's not a high probability trade. And the more you look into it and you trace this trend line, for instance, you see that actually you're entering on the test of this trend line. So euro against the dollar hasn't been a particularly good market this morning. Let's see if we have a little bit more chance with yen, euro against the yen. This line here is the big round number, is another very important psychological number. Again, from here you can see that we had this trend line that was broken here. You can trace a new one here, and this is our London Open. You might also trace this area here. From yesterday. And you see that yet again seems to be quite important today as well. So when we start here at 8 o'clock London time, we really have not a lot to do. The bulls are banging their heads on this level here. This level has been tested during the early morning, and it has been tested during Frankfurt time, and they are testing it now, and it doesn't seem really to work. So the euro is not very volatile this morning, and there is not much to do. And as you can see, these two histograms are telling you that there really isn't a really clear trend. There's some more things to say on this, but I'd rather go on with other markets and see if we have better luck. This is the Australian dollar against the US dollar. Again, we have identified yesterday an area which was a support and then a resistance. And lo and behold, it has been confirmed again during the night and today. This is quite important because, for instance, when you see something like this, you are tempted at 9 o'clock to see, well, this is a buy signal, the market is going up, I really would be interested in buying this. The problem with this is that, well, first of all, you have a high here, and then you're really buying into this important area. So this kind of analysis will have prevented you, at least, if you use it, from taking a long, which was obviously a trap. And as you can see from this, from the shape of this bar, it was obviously a trap. Volume was also a little bit higher than usual. So the bears now get in control, and what we can do then here is we can try to see if there is a breakout of this low here. Remember, we are in a trap, or the markets have set up a trap. There could well be that they're going to set another trap. What happens here is that the bears have trapped quite a lot of bulls, and they want to flush them out. And they can imagine that quite a lot of stops are here, and quite a lot of stops are here. So again, if you want to enter here, you enter at a very dangerous situation if this is a trap, as it proved to be. One good point of this system of signals is that you wouldn't be allowed, if you use this particular system, this particular signal, you wouldn't be allowed to go short until here. And here, actually, with the buffer that we then use, you would have been triggered. So this was a counter trap, and now the bulls are pushing up, and again they stop at this particular level. So this is another reason why, for instance, I'm a little bit reluctant to trade the very first couple of bars, or 3-4 bars in the morning, because you have quite often quite a lot of this plays, as we can see later on. Now, here we can start saying, okay, look, the bulls have tried once, have tried twice, three. They actually tried here when there is more volume because it was London Open. They tried here. I think it's probably about time that they're going to give up. Here you have, at this level here, you have a sell signal. Again, you can't be sure that this is a good place to enter because you have this low here. A safer place would be just below this, and with a stop up here. If you enter here, you will start thinking about, okay, this is maybe another trap, but the bulls really didn't manage to go even to test the pivot, and they started going down. So if you do this, you could have had your first target of half hour, for instance, and as you can see, the signal didn't change from here. So this is definitely a downtrend at the moment. Euro against Australian dollar. This is really very interesting, because when the markets, when you use trend following system and breakout system, you really want momentum, and so far we haven't seen a lot of momentum. But on these markets, there is momentum, and this is the best situation for our kind of systems, which are trend following and breakout. Again, morning, you have this level here. This has been an important area again, but there is a clear breakout from this area. You can probably start entering here with a stop down here, but by far the best situation will be this one here. This is a breakout. The bears are trying to push it back. They can't. They bounce on the moving average, and then they break out again. And here your stop could be put here, so you have a higher probability of reaching your targets. Ideally, your target is R1, and that's exactly what happened. The markets went up and stopped at R1. So this was by far the best trade for this morning. A couple of other things on cable, for instance. Again, it's always quite interesting to see what happened the day before. This is a resistance area. And the markets broke the resistance area and then tested it again, and then tested it again, and then broke again. Now, one of the things I was saying before, it's the early bars are always very, very tricky because they set up traps all the time. And as you can see here, there was this trap, and the fact that they went down here, it's because they flushed out all the bulls that put their stop down here. We could have prevented this loss again because this is a big round number. Remember, big round numbers are psychological levels, and there is no scientific reason for them to be important, if not for the fact that we are human and we like big round number. And if you don't believe that this is important, well, look what happened here. The market, the bulls tried to break it, they couldn't do it. This was a trap anyway. They tried again and they stopped at a big round number. So again, here you really want to wait and see what the market does. When you see something like this, you see that you have a kind of range here, and at this point anything could happen. The bears can be in charge, or the bulls can be in charge. Something is about to happen because at this time it's 9 o'clock. 9:30 there were some relatively important news on the pound. So that's a reason why I wouldn't probably have taken this trade. And the second reason is that these are lagging indicators, so you can't really go, if you use the system, you can't really go short until you have a signal here, which is this one here. But this is particularly good because, well, yes, you missed this one, but this will give you time to wait until the news, which is 9:30. And when the news comes, you have a short signal. You see that the bears are in control now. You have a short signal, but you have R1. And again, R1 is another important, could be another important point, psychological point. So I like to enter below R1. Now, if you want to be super sure, you have to put your stop up here, but this is really too big. And if it is a breakout, I think there is a breakout that will test at least this level here, and hopefully lower levels here. So I'm quite happy to put my stop here, and I have half hour and 1 hour. GJ, same story. I'm not going to do too repetition here, but as you can see, you have a sell signal here. It's on R1. You wait for R1 to pass. Here you have a low. This time is 9:30. You want to wait for the news to go, and then you can enter here, and you have exactly the same trade. In this case, GU and GY were highly correlated. Let's move to UJ. Once again, let's see what happened yesterday. prolong. You can see it even here, but it's less clear, but it's obvious that there is something here, some important area there, and also down here. When London opens, you have sell signal. You're already on sell signal. You have this series of lows here tested, so it's more prudent to see if there is an actual breakout of this. There is, and you actually got your half hour on pivot. Pivot will be my first target anyway. And again, pivots has proved to be quite important. The market then bounced back, and this is another important pattern. You see that the market broke, bears are in control, bulls react, bears are trying to react again and try to test again the pivots, but they can't, and they're really flushed out. And that means that the bears are not so strong, and the bulls are probably they're going to have an upper hand. And if they break this high here, or this double line, or this moving average, or this area here, I'm quite happy to go long. And with me, there's this, which is the signal to go long. So this would have been another very good trade, and lo and behold, it stopped at this area here. Canadian dollar. Canadian dollar was a little bit more tricky today. It is a little bit tricky in the morning, actually, obviously, because the two markets are mostly closed. Can I see any pattern here? Well, probably I can see this one here. This was some sort of support that became resistance, and then became support. But other than that, I have a trend line here. At 8 o'clock, the market is going down. There is an S1 here that has resisted here. So you really want this to be cleared in order to go short. Keep in mind that there has been an extension on the shorts all night long. So you're really going into quite late into this trend. When you have this, you really want to keep your trades on a tight leash. And this is 5, 10, 15, 20. When the market dips down here, I would probably close out the position and break even and get ready to go short again here. But what happens here is that the market doesn't go short, doesn't go down, it goes the other way. There is a signal, buy signal here, at this level here. When this buy signal happens, you have already cleared the trend channel line and this high here, but you haven't cleared this one. So a higher probability trade will be to try to see if it goes up here. You probably stop at break even here. There is a pivot there, so this is not a high probability trade anyway. We're seeing FX. Let's see if we can have a look at gold, for instance, non-FX markets. Gold, you start from here, you have not only an uptrend after the downtrend that we had the previous days, but also you have an acceleration of the uptrend. You see that the slopes of these trend lines is steeper and steeper and steeper. This is a clear sign of a very strong trend. Is there any obstacle? Well, first of all, this area here is where the move started. You had the breakout from this area here. So this is a magnet, probably. Other areas, they're quite spaced out. I don't think that I can see a very clear pattern anyway here. So it's long. I can put the stop here because it's below this low and it's below R1. And I'm suffering a bit. And then here I don't like it anymore because it's a double top. The bulls, out of all this momentum, didn't manage to breach this high here. And when they come back, I will probably close the position and break even and wait again. And so I will probably do this trade here, which will give me half hour. It doesn't look as dramatic as the original analysis, but it's still quite good. Last but not least, it's DAX. I really love the DAX. It's a very dangerous market, however. As you can see, you have this big spikes here. But let's go quite quickly. 8 o'clock, London Open, you have a big spike here. You would expect this to go up here, but before doing that, it goes the other way. Now, you enter here, keep in mind that you would enter at 50 with a stop at 94. Stop at 94 is never a good idea. It's better to put the stop just above a big round number. And so this is a 50 points drop, and you are expecting another 50 points drop, and there is a pivot in the way. I don't like this kind of trades, and when I see these kind of things, let's see what happens if I do the 1 minute. You see, when I entered here, there is this, and then there is a complete reversal. I would probably have gone out. So I wouldn't have been in the first place, but I would probably have gone out. And I wouldn't have done absolutely anything until I see what the reaction of the market is at this level around big round number. I don't have a buy signal until here. When I have this, it's too close to this double top. So I might want to wait for this to clear this double top. But if I wait for this to clear this double top, even if I put my stop just below the big round number, I will be actually buying into R1, and you can see that R1 hasn't been passed, so no luck there. But it's very, very difficult to follow all this market on 5 minutes. It's very, very difficult to pick and choose the one that works, because you never know which one it is. And so it would be much, much better to have something which is enormously simplified, i.e. an automatic system. However, you can see how difficult would be to try to code all this unbelievable analysis that we have done on price action. So it's always really a kind of compromise. Well, this is food for thought. I hope it was interesting. Let me know if you have any questions on this. Write to me or just send messages on the boringtrader.com website. Thank you very much.